Now students, there are two methods of charging depreciation that we have just done. So the methods that we have done are methods of charging depreciation. They are straight line method and written down value method. Now students, these are the methods through which we charge depreciation, that is we calculate depreciation. But the calculated depreciation is presented in accounts in two different methods. This presentation or recording of depreciation is done by two methods. Is done by, first of all, by charging depreciation to the assets account. That is, whatever is the depreciation is reduced from the cost of the asset or from the book value in the beginning of the year. And the second method is by creating a provision for depreciation account, or accumulated depreciation account. So now students, remember, depreciation will be calculated by straight line method and written down value method, but it would be presented either in this manner or in this manner, that is either directly deducted from the cost of the asset or by creating a provision or by creating an accumulated depreciation account. So let us understand the first method, that is when depreciation is charged to the cost of the asset. Depreciation is charged to assets. That means in this case, depreciation is deducted from the cost or the book value. In machinery or in asset account only. So journal entries in this case would be journal entries when asset is purchased. When asset is purchased, journal entry would be assets account debited to cash or to vendor, that is the seller. Then when depreciation is charged, in this case the entry would be depreciation account debited to assets account. Now students, the rules are same as we had done earlier. Depreciation is a nominal account. The rule for nominal account is debit all expenses. So depreciation is being debited, whereas there is a reduction in assets, that is credit what goes out. Then the third one is when depreciation is charged to profit and loss account. We have understood it earlier that depreciation is an expense for particular year. So this expense should now be transferred to profit and loss account. So in this case, entry would be profit and loss account debited to depreciation account. Again students, depreciation now has been transferred to profit and loss. So the entries in case depreciation is charged to assets are asset to vendor when the assets are purchased, then when the depreciation is charged, it is depreciation to assets, reduction in the value of assets, and at the end of the year, the depreciation would be charged to profit and loss account. Now students, coming to second method. The second method is when depreciation is transferred to provision for depreciation account.